Okay, everybody, this is Jose. I believe that you should be able to see me and hear me now. I believe that should be the case. Please go ahead and give me some confirmation on the chat box if possible. So we will continue the session normally after you do so. Perfect. Perfect, everyone. Okay, so yeah, so that's all good, guys. So I'm just gonna continue, okay, because market hours are approaching and we need to put some trades in, okay? So I'm just gonna keep going, guys. Definitely apologize for the technical issue, okay? But let's keep going. So anyway, so yeah, and by the way, if you are connected with other UFO traders from our community that are trying to connect, and you guys are either messaging or sending messages to each other, just let them know to get back to YouTube, with a /live at the end, and to refresh their browsers, and they should be fine. Okay. Anyway, so yeah, I was talking about the market condition where the S&P may start making all times high. So all those stocks such as AXP, for example, which is another trade that we plan, that we identified, that started making all times high. If the market keeps going, I mean, those stocks are gonna keep going. And the beauty is that we started before the market started making all times high, and therefore this should produce a good advantage for us, at least to take some partial profits out of the table at some point and be left in a risk-free trade for a potential continuation of a very strong uptrend that we have in front of us. Okay, and if that's not the case, well, then it's not the case. But at least the very good beginning that we had in these trades allows you to, as I said, at least scale out some profits from the trade and again find yourself in a risk-free trade. Okay, so when it comes to the VIX, okay, which give us an idea of what's going on with the prices of the options, well, obviously the options are becoming very cheap. Okay, and today again, with the market gapping up, people are getting very comfortable, very confident, and the price of the options is going to start dropping again. So what I would like to do is begin the day planning to purchase options, see if we can find any good opportunity to purchase options. If we were to find that type of opportunity, then we would take advantage of it. Okay, and then probably what's going to happen is that later today, after making all times high, the people that have been buying in the prior days will start taking some profits, and therefore the S&P will start falling. So if that was to be the case, odds are that people get a little panicky, and next thing you know, the VIX will move back up, and that will be the perfect time for us to start looking at credits. Okay, so before we start the day, let's begin with looking at our debit trades. Okay, so we have a collection of trades that are potential trades for debits. Okay, I mean. My only issue, so I'm going to go over these trades very quickly, like Amazon. My only issue, let me go ahead and I would like to activate here in the status line the percent change. Okay, so I don't know why I don't have it. Normally I always have it there. So let's take a look at the percent change. So we can see that Amazon is going to be 140 up. So we are far away from the average, and it's going to be 140 up. So certainly we can plan a trade on Amazon, but maybe maybe later on. Okay, ARRY, far away from the average. BBY, closer to the average, but today, moving gapping up 0.96%. It's going to make it difficult. So I would like to see a stock that is either close to the average or falling. So that one is 1.59% DE. The Dow Jones Index, of course, is going to be higher, 0.95%. EFA, which is Europe, Asia, and Middle East. Okay, that stock is basically around the average. Okay, around the average. Okay, with so we have that particular close above the average. We have the DMI being green. So if we had an opportunity with EFA to have those green UFOs close by, that certainly could be an opportunity for us to take the trade. Okay, so and it does seem that we do. So we have the average located at 6508. Okay, the average is 6508. We have UFOs here located at 6486, and the top part of the UFO is going to be in the 90s or 90 something. So basically, we have the UFOs more or less around around the the average price, okay, and therefore we're gonna be able to put something together here for EFA, okay. So EFA, okay, we will make a note of EFA to keep it in mind. So we know that this is a stock that we potentially may execute a trade, in a few minutes when the market opens. Okay, and I'm gonna wait because I need to look at the option chain. So with a little technical problem, obviously I wasted a few minutes, and I never had the chance to look at the option chain. 10 minutes before the open, option chains normally reset, and therefore I am a little blind when it comes to understanding which are the options that are available for EFA. Okay, so I will look into that in 5 minutes. Okay, so we'll make a note here for EFA. What else? We have the Japanese market here with EWJ. And by the way, since we are looking at EFA, also notice how, well, actually, yeah, it works too. We have a similar setup here where the close is above and we have the DMI is red and the average is 54.08. And notice how we have the green UFO located around the price. Okay, now the one thing I don't like, okay, and I still have pending data, so I need to wait. But the one thing I don't like at all is that particular figure. Okay, and so let me check pre and post market data, which by the way I didn't do with EFA. So I'll come back to EFA and check. We have 39% with pre and post market data, and we have with a regular session we have 43%. So I would consider not. I would actually suggest not to trade EWJ because obviously, being in the Japanese market, most of the relevant trading information is not available in our ETF because the ETF only trades during US market hours, and in this case, it may be the source for problems. Okay, so let me go back to EFA and double check the pre and post market data. So we got 48%. Without pre and post market data. With pre and post market data, we got 54%. Yeah, so still okay. So we have these UFOs in the same location, which is around the average. Okay, and now we got a 54%. Okay, so again, I'm okay with EFA. Okay, I did forget earlier since I was rushing a little bit after the technical issue. I kind of forgot to check pre and post market. Okay, so sometimes it's dangerous to be human. But anyway, after double checking, we concluded it's okay. Okay, so EFA will check that in 3 minutes as the market opens. Okay, so EXAS photo up above the average, 1.3% up. So that would be a little bit of a waste of time. Please place your eyes in this portion of the screen right now as I go through my symbol list. Okay, so that way I can do it very quickly. So I'm looking at Lulu. And when looking at Lulu, so basically Lulu is far away from the average, okay, and we are talking about 1.12% up on top of that today. So Momo is going to be far away and 2.95% up, so no Momo for today. PAGS, we're gonna be looking at that particular stock, which could be a possibility. But since I got EFA, if that's okay, I'll focus on EFA also because the price of the stock is much cheaper. And I mean, this is definitely very attractive. This is not common to see this in stocks. Okay, so what about pre and post market? And there is no pre and post market for that. Oh, sorry, I was using the wrong time frame. 55 minutes. So we're gonna have to wait a second to see what the performance is. Okay. So it's loading. You just need a little extra time here. Here we go. So we got 54% with a 55 without pre and post market. If we add pre and post market, this is 44. So definitely for that stock, we would use this combination. And with this combination, our UFO is 35.22, which I believe it's probably 35.79. So that one is kind of a little lower. Okay, so unless the trade with EFA happens to be not adequate based on the parameters, then if that's the case, then I will come back to PAGS. If not, I would pass. Okay, because definitely I am attracted in this stock by the 54%. That's nice, but at the same time, EFA is a market with much more liquidity. PAGS, I have not traded that one with options, and even though it passes the rules of the scan, I will be pretty positive that we will see some decent level of slippage for the options, and we don't want that. Okay, so I could certainly recheck if EFA doesn't look good. Okay, with PayPal, the market just opened, by the way, so we can see the gap. PayPal is far away from the average. SQ Square is far away from the average. TWLO is far away from the average. HB is far away from the average. XLU far away from the average, which is to be expected since the market is gapping up. XME as well. And Zayo Group Holdings is far away from the average. Okay, so back to EFA to see what we have. Yeah, again, this market is gapping up. 65.12 is the new value for the average. With the pre and post market data for EFA, we were looking at with pre and post market data, we were looking at the 64.86. So certainly that UFO is still valid. We just need a little bit of patience here for price to come back to the average. Okay, and then a trade could be taken. Okay, so since the market is moving up, in order to be efficient with my time, now that I know that the only right pick I have in my list for longs is EFA for today, for now, but we are still far away from the entry point, which is the green UFO in the 55-minute time frame. So what I'm going to do is I'm going to move and check on the shorts, which obviously are less because the market is in an uptrend, and look at those shorts to see if I do have an opportunity to execute those trades. And if I do, then I'll plan on it. Okay, so with Dell, bad news is that we open above the average, as you can see below. So entering the trade now with invalidate our rules. Okay, certainly we are entering a UFO, so you could certainly see the price of Dell fall, but instead of rushing into getting into this trade, especially, the S&P is in an uptrend. We talked about what's happening in the S&P. So shorting Dell at this point would be probably a little too risky. So you will want to wait to see if Dell goes back down, closes below the average, and then replan on an entry. Because if Dell was to react to these red UFOs and fall down, so typically what would happen is that new UFOs would reform on the way down, and then you will be able to plan those trades, maybe a couple of days from now or tomorrow. But instead of guessing that this is going to happen and hope on a guess, we're just going to react on the evidence that the market gives us. And right now, Dell is obviously, it's evident, it's above the average. So we will be breaking the rules if we enter the trade. So we will pass. Okay. What else do we have with SDS? Well, actually, this is an ultra short ETF, so I'll pass on that one. SEAS. That one could be a candidate. Okay, so that one could be a candidate in the sense that price is coming back up towards the average, and we have some UFOs there. Okay, they're a little too high. Let's check pre and post market data to see if we have an opportunity. So 55.94, changing this. Let me do that again with the 55-minute time frame. Sorry for that. So I will reload this data, and we may have a trade here because the average is located at 29.79. So 29.79, the bottom part of this UFO is located at 30.05, which is like 20 to 30 cents away from the average. And let's face it, if the price of the stock rallies towards the UFO, the average will also rally. So we may have a trade. At this moment in time, I'm not too excited about 44%. It does not give me an edge, okay? And that's the way the stock is traded. So I'm going to check on regular session to see if I get a better performance, and I do. Okay, so I do have a 50% or plus performance. I do have the red UFO that begins its price at 29.87. This lines up very well with the average, which is currently 29.79. Okay, so certainly we have a trade to plan on SeaWorld Entertainment. Okay, so again, the prior close below the average. The prior close is also showing you red. Okay, notice there is red on the top. Okay, I know the current candle is not showing red, but remember the methodology is not asking you to look at the current candle. The methodology is asking you to look at the prior candle. The prior candle is red. Okay, and therefore we're gonna maximize this chart to step two, look for the targets using the weekly time frame, not the daily time frame. So activating UFOs in a weekly time frame with SEAS, we have identified a target to be located at 28.38. Okay, I believe that everybody should see that figure. 28.38 is the location for the target. Okay, guys, I can read and I can see that some of you have intense problems with the buffering, which obviously it's not ideal. It's also obvious that unfortunately at this point I cannot do much, so I will just keep conducting the sessions like nothing happened. And when we post the recording, you will have the opportunity to catch up in a proper manner. And again, hopefully it will be a better experience for you guys. Okay, so if you watch this recorded, again, please accept my apology in this case. Unfortunately I cannot change that. Okay, so anyway, so let's continue. So we can take advantage of this trade. So we have the red UFO located at this particular price level. Because we are looking at debit opportunities, okay, we are gonna be on bear put spreads, correct? So the right type of option strategy to be used would be a bear put spread, which is how we're gonna produce the best results based on the methodologies that we have been exploring together. Of course, we need to calculate the TTT, isn't it? And to calculate the time to target, known as TTT, we would want to bring our calculator, look at the entry price, which is going to be the bottom part of this UFO, again, 29.87. So 29.87 all the way to 28.38, which is the target that the weekly time frame showed us to be possible. We are talking about $1.49 of potential profit to be made on SEAS. It's not a lot, but we have to respect that green UFO in the weekly time frame. We cannot remove it because it's there. Okay, so we have to respect the market information given to us. So the question is, what is the ATR in the daily time frame? So we can apply our TTT process and therefore calculate the time to target. Okay, wait a minute. I just applied the ATR in the wrong place. I wanted to apply the ATR to the daily time frame, not the 55. So I need to make sure I click in the right place. And the ATR here is 1.0650. So if I divide 149 by 1.0650, okay, and I multiply this number times 7, this is telling me that the time to target is 10 days. Okay, so again, very short target, which, to be honest, is not ideal in the sense of profitability. But in the other hand, remember, given the market condition where the broad market is in an uptrend and probably most stocks are moving up, probably the reason why you would want to enter this trade is as a hedge, as an offset in case the market falls and hurts whatever other long positions you may be in, such as Starbucks or American Express. Therefore, it's okay that this stock does not have the potential to make unlimited amount of money. It's okay that the potential for profit is shy, because again, probably you are entering this trade as a hedge for other long trades that you may have. Okay, so how are we going to build this bear put spread? Well, a bear put spread is made of buying a put above, okay, and then selling a put below. That's how we make a bear put spread. Now, the put that we sell needs to be at least beyond where the target is. So at least we need to use the 28. And I would guess that probably we need to go lower than that. So we'll see that. And then the put that we buy, okay, so we need to adjust it in a way where we get deltas around 30. To do all of this, okay, I'm going to have to launch the option chain. So here is Option Station Pro loading. We're going to launch the option chain where we will be able to look at the options available, look at their liquidity, also adjust the Greeks. And also, by the way, I didn't say it, but we also need to look, apart from the TTT, which is 10 days, we also need to look at the earnings reports to pick an expiration date that lines up with that earnings report to minimize the impact of the time decay. In this case, we are talking about August 5. Okay, so August 5 is the earnings date. So I got the option chain on my other computer screen. Just give me a second and I will bring it into the main screen. Here we go. So here's Option Station Pro, and I will change the symbol manually to SEAS. Okay, and let's see what we have. And again, first step in our mind, we're thinking August 5. Let's see what do we have around August 5. Of course, it's going to be more than 10 days. So that's what we need. We need an expiration date that is more than the TTT, that is lining up with the earnings report date. Okay, so, okay, I got a timeout. Let me try again. So please wait. It is loading SEAS. Okay. Okay, so I got a second timeout. Obviously, it's not the best case. Let me try again. I am reloading. Obviously, market data, market analysis software such as TradeStation is sensitive to market data. And as you know, my connectivity is not the best in the world at this moment in time. And therefore, TradeStation is having a little bit of struggle to pull the data out of the market to load an option chain. Okay, so I got an error message on my other computer screen telling me that the Option Station Pro was not closed properly because of the internet connection. So basically, I am having an Option Station Pro that got hung. So I'm going to try to kill the process manually to be able to relaunch it. Just bear with me. I will try to do that quickly. Okay, so I'm not sure I will accomplish that goal. Let me see. Okay, now I did. Good, perfect. So let's relaunch it. And now let's find out if we will get SEAS data on the screen. Okay, so Option Station Pro is loading. Okay, yeah, it is not loading. Okay, so let me do this. I will save TradeStation. I am going to kill TradeStation and restart the whole thing to see if second time will be better than the first time. Again, it's 100%. The reason for this is 100% my connection. Okay, guys. So appreciate you guys sticking with me and being patient. Again, I have the best intention, but obviously I have a technical limitation at this moment in time just because of my geographical location, which is something that I could not change. So relogging in. Okay, just reloading the workspace. And the moment I have it, I will relaunch OptionStation Pro. Okay, here is SEAS, relaunching OptionStation Pro. Here is the OptionStation Pro. Loading data for the S&P. Okay, and now this is when we will know, hopefully, we'll be able to get the data we need to plan the trade. So SEAS, loading. Here we go. We got it. So again, in our mind, we are looking at August 5. So the nearest I got is August 2nd. Of course, that's 43 days to go. That's good. No problem with that in the sense that we only need 10 days. Okay, now notice how using that expiration date, notice the type of spreads that you would have available. Again, if you plan to do the trade without the use of stops, and you shave it aggressively and you get filled, it's not like it would be completely crazy, but certainly it would be far from ideal. Okay, so I'm going to look at 19th of July to see if the spreads are much better. Now I got like 20 cents of spread, 20 cents of spread, 30 cents of spread here. So this is a little more reasonable. We will not gain the benefit of the earnings reports here, but since this is a trade that is supposed to be for 10 days only, or something like that. So I will say that 29 days to go will do the job at this case, okay? In this case. And by the way, and again, let me repeat myself, this is a trade that you would enter in a portfolio as a hedge. And by the way, we are meeting entry as we speak, okay? So it's time to execute this trade, okay? And I'm gonna do it by right-clicking on the put side, analyze and buy a vertical. So remember, we are selling the 28 or below, which means that I need to buy the 29 or above. Okay, so if you were to do that, okay, you end up, let me remove everything but the current price. So you will end up with a minus 10 delta trade if you were to do the trade in this way. Really, you could use 30 if you want, do 30 and 28. If you were to do that, you still don't achieve the desired delta. Okay, so therefore, the way to execute this trade would be to lower our 28 to 27, and now we almost get what we need, and lower it one more time to 26, and now we get the delta we need. Okay, so again, because of the slippage in this trade, I will want to be a little more sensitive and look at those prices manually. So the 26 is giving me notice the midpoint. Okay, the 26 and the 27 is basically the same price. Okay, because the 26 gets much more slippage than the 27. So what I'm going to do, even though it's going to give me just a little less delta, less than 30, which is the goal, given the fact that that stock, it's not too liquid and I need to tweak it as much as possible to make it as logical as possible. So then my proposal to you would be to use July 19, buy the 30 puts, sell the 27 puts to create a $3 spread. That would cost you $100 if you were to get the midpoint. So this would be the plan for the trade. And since that stock is meeting entry as we speak, okay, I will execute this trade on my side by clicking on trade. And because, again, as you know, I am using a simulated account on my side, so I'm going to go for market. In your case, please, please, please don't use market price. You would pay 120. Use a limit price and shoot for 1.00. Go for the mid. And if you don't get filled, you don't get filled. But if you do get filled, at least you get the best price that was possible for that spread. Okay, so I'm gonna place order. I'm gonna click yes. Okay, and I have this order in the system where, as you can see, I have been filled. Okay, and I am in this trade with SEAAS. Okay, so again, we had to kind of sweat a little bit in the sense that I was not having available market data, a little bit of a problem with the connection, etc., etc. But in the end, we were able to plan a trade using July 19, 2019 expiration date, bear put spread, where we are buying the 30 put and selling the 27, and this is now confirmed. It's been actually filled on my account. Okay, so if you choose to follow this trade, you can go ahead and execute. This would be the time. Okay, good. So that's it. We got SEAS. Okay, so what is happening to the market? I would like to take a look at what's happening to the marketplace. SEAS is moving up strongly, so I would guess the S&P probably too. Well, actually about the same, still 0.99. So yeah, so I probably EFA, which is the other stock, the other ETF in this case that we were going to use to plan on a trade. That one is probably as well in an upper point. Okay, so look, in the case of EFA, okay, in the case of EFA, you would want to plan a bull call spread. Okay, in the case of EFA, there is no earnings because it's an ETF, so the whole trade would be easier to plan. And since we consume some time today with some technical issues, okay, and that particular ETF is far away from the price, so I will just leave on the screen the trade idea, okay, the trade idea, which is to use the 55-minute time frame with EFA, wait for EFA to come back down in that green UFO before you execute the trade, where potentially EFA would go back up, reacting to, after falling, reacting to the moving average, okay, going back up, now that we got a strong trend. Okay, so that is definitely a possibility. Again, because we are far, I will let you to plan this trade. Okay, so the next thing I want to do is look at non-directional trades to see if before we conclude the session, at least we can find also a non-directional trade apart from a directional trade. So at least I can give you different options, different flavors for your trades. And when looking at the list, we got EOG, GIS, Coca-Cola, Nike, UPS, USB, and WBA. Okay, so some of those markets, for example, Coca-Cola. I mean, nothing wrong with clicking Coca-Cola and doing your analysis, but before I do so, let me tell you, I'm not going to do it because Coca-Cola is such a quiet stock that most of the times the premiums you get never justify executing a non-directional trade because you get very, very little premium. So you probably remember that in our rules, okay, we have, when it comes to non-directional trading, let me find it. Okay, I think I went too far. When it comes to non-directional trading, we have a rule that has us make sure that when we do the non-directional trades, we collect at least 15% in premium of what the risk of the trade would be. And with Coca-Cola, this almost never happened. Okay, so I'm just using a little bit of time to let you know so you can save time for the rest of your life because Coca-Cola most of the time got no premium enough. Okay, so I'm going to move into Walgreen Boots Alliance, WBA, which this one is a stock that does provide greater level of premiums. Okay, when looking at the regular session times, we got a UFO performance metric of 54.82. When looking at pre and post market, we have a performance metric of 47. So clearly we can see how the institutions are dealing with that particular stock. And when looking at this, we can certainly identify that the regular session is the way to go with WBA. Okay, so we're gonna focus on WBA, and we're gonna be planning on a non-directional trade on WBA. We have 3 red UFOs above, 3 red UFOs above, 3 green UFOs below. Price is somehow in the middle. This, my friends, is an ideal setup for a non-directional trade. Okay, and thank you, Scan, for finding that for us. So let's plan it. To do a non-directional trade with WBA, the first thing I need to do is to check when the earnings reports are, because the Scan is looking for high price options. Okay, and there may be a reason for that, which is maybe tomorrow is the earnings. So we have to be careful with that. Okay, and by the way, I'm almost right on it. It's June 27, where today is June 20. So June 27 is next Thursday. So, I mean, I'm gonna just look at this like at the speed of the light, because probably it's not gonna work. Okay, probably it's not gonna work. So the only way to do this trade for me would be to use options that expire tomorrow. That's the only way to do it. Okay, only way to do it would be to use options that expire tomorrow. Okay, good news with, actually, I only have a spider here, so let me try to reload WBA. Hopefully we'll get it now. So WBA is trading at 53. If I was to do an iron condor, I would need to sell the 56s and sell the 50s. So I'm gonna look at the 56 call to see what is the premium involved when the option chain loads, which it didn't. It time out. So again, I'll be patient. I will close this window. I will just wait a few seconds, okay, and then I will load it again. So, to be a little more efficient, I will also want to look at USB, US Bank Corporation. That is a $50 stock. Okay, when is that one producing earnings? So USB, not like that. So USB, that would be earnings on July 17. That one would be an easy one. Let me see the chart. Okay, so the chart really has a lot of green but little red. So let's look at pre and post market. 53 is regular. Pre and post market is worse. Okay, so not a good setup for USB. What about UPS? So UPS reports earnings on July 24. So again, dates are good for UPS when looking at the price chart. So we are looking at red UFOs above, green UFOs below. This is a pretty wide range. Okay, this is a pretty wide range. So this may be an option for us to explore further. Okay, so pre and post market, that is 42. Regular session, that is 115. Okay, so yeah, so I will keep in mind UPS. I want to check first WBA. Nike is also a stock that normally has some good premium in it. So I just want to look at the dates. Nike. So Nike is June 27, so Nike would not work. KRA is an ETF, and EOG. EOG. So that stock reports on August 1st, which is also good. It gives us time. Okay, so let's look at EOG to see what we got, and if not, we'll go for WBA, and if not, we'll go for UPS, and hopefully we'll find a trade. So we'll plan it, and then we'll be able to conclude the session. Now, EOG is giving me 47% with the pre and post market data. I'm not happy with that. What about pre and post market? That's 42, which is worse. Okay, so not adequate for a non-directional trade. So we forget about EOG. We are picky. The life of a trader is to be picky. WBA, we know we have a potential setup with WBA. So what I'm going to do now is load the option chain to check first on WBA and then UPS. So loading. Okay, so here's the option chain coming up. We'll see what is the symbol that show up. I believe it's going to be SPY since it's the symbol. Yes, correct. So here's SPY, but again, we don't need SPY. We need WBA. So I will type WBA now that we know that our only two candidates is WBA and UPS. Let's look at WBA. Remember, with WBA, earnings are on June 27. So the only way to do this trade is to use tomorrow expiration. If they happen to be plenty of premium in tomorrow expiration, we may have a trade. That would be a very high probability trade. Trades like that before, where we did a trade on Thursday for Friday expiration. We've done that before. It's rare because normally options have limited premium if they expire the day after. That's kind of obvious, okay? But at the same time, sometimes there is a lot of expectation built in those options, and we do find a premium. So it's always worth it to check just in case, because then it's almost like a risk-free trade. Okay, it's a very high probability trade. Again, normally we will not find the premium we want. Okay, so here's WBA, and when looking at tomorrow, again, I'm looking at the 56 call, and the 56 call is paying me 3 cents. So as expected, we don't have the premium. So let's move and check UPS to see if UPS does give us what we need. So loading UPS. So here's United Parcel Service. Okay. So with UPS, I believe earnings were in July, but I kind of forgot the date. So let me type it again. So UPS earnings are on July 24. Here you can see it. So we are looking at maximum using July 19. That would be the maximum. Okay. Again, the least you can use, the better. So let's begin with the 28 to see if the 28 will work. And I also need to look at the chart of UPS because, of course, my UFOs will dictate which options to sell. So if I was to do this trade, I would want to be using the 115 above, okay, and maybe I would want to use like the 92 or something like that below, creating a non-directional trades between UFOs. Okay, so 115 is very far out, and with the June 28, it gives me only a few cents. If I use July 5, 115 is giving me still 2 cents. If I was to use July 12, okay, we are still talking about 2 cents. And if I was to use the next one, which is July 19, the 115 is still giving me only 5 cents. Okay, so yeah, unfortunately, that UFO is way too far. Okay, but again, the market condition is favorable, so just watch it, because a few days from now, okay, you may have price fall. That may be tomorrow or the day after. You may have a UFO, it goes down. You may have another UFO, it goes down, and next thing you know, now you can plan a trade, a non-directional trade, where this would be your top, okay, and maybe down here would be your bottom. And maybe now you can use a 1 week expiration date where you only expect this market just to, remain range bound for like a week and make a profit out of that. Okay, so again, something for you to watch. Of course, the scanner will tell you, the scanner will cheat you the symbols. Okay, so just follow what the scanner says. Okay, so unfortunately, no non-directional trades for today, and therefore we can look into the credit trades. Okay, we have credit trades: neutral long, neutral short. So I will start with the neutral short because, again, the market is moving up. Because the market is moving up, most of the stocks are moving up, and therefore we'll get more premium from the call side than the put side. Okay, so we got we got CAJ, let me say that again, CAG, and we also have Oracle, being stocks with a good level of premiums in the options. So we always need to double check if the reason for that was earnings. Okay, so CAG. So earnings is on the 27th, so we cannot use CAG. So what about Oracle? Oracle already reported earnings on the 19th. That was yesterday. And yeah, so therefore I would rather pass on Oracle, because that, remember, translation updates options data when it comes to the level of premium in the options, what is known as implied volatility. That data is updated once per day on the close, which means that you always have 1 day delay with that data. So I'm not trusting it since earnings were yesterday. So I will pass on Oracle, and therefore I'm left with the list of longs here, neutral long. WBA, we already talked about it. What else do we have here that could be interesting? So Merck could be one. FedEx could be another one that could be worth to check. Okay, so let's check on Merck and FedEx to see if we have a potential trade. If we do, we'll take it. If we don't, we will conclude today's session with these opportunities that we have been given. Okay, so I got FedEx with earnings happening on the 25. So obviously not possible. And Merck, MRK, where we have earnings happening on July 30. Well, July 30 is certainly possible, because next Friday will be, let me say that again. July 30 is actually next month all the way. So we have next Thursday, next Friday is Friday, June 28th. Okay, so we can use June 28th, we can use July 5, we can use July 12, July 19, all the way to July 26. So we have 5 potential dates that could work for us to plan on a neutral long for a credit. Okay, so that stock is looking like kind of like it's making all times high, and it seems to be Merck. Is that the case? So I'm looking at a monthly time frame just to get reference. No, actually we're in a red UFO in the monthly time frame, but not in the weekly anymore. So most of the orders have been consumed. Okay, and on the daily it's looking like that. So what about we look at the 55-minute time frame, as we always do? We got a 56% UFO performance with pre and with the regular session data. With pre and post market, it becomes 43. So this is to be discarded. We focus on regular session only. And now, to be very, very safe, you would want to protect yourself with at least a couple of UFOs. So the question is, what if I was to sell the 83s? Let's look at the option chain for Merck. If I use next week and I sell 83s, how much I get paid? I get paid 18. So that's not enough. That's not enough. We need a minimum of 35. Okay. Also, quarterly options normally have little bit worse liquidity. Okay, so it seems that July 5 may be a better choice for that premium. And if we do July 5, we do get 29. Okay, we do get 29. So let's go ahead and see what's going to happen in this particular trade. I think this trade may work. Okay, so we're gonna be looking at it and see what's going to happen. Okay, so let me get the rules back. Okay, so we check the earnings calendar. We're going to use short-term expiration. We want to get at least 25. 35 is ideal. And then we need to buy the protective strike for our bull put spreads. And we want the net credit to be 15% of the difference between strikes, which is the risk of the trade. Okay, so if I was to let me write it here. If I was to sell the 83 put and I was to buy the 82 put, okay, that will produce $1 of risk. The difference between 83 and 82 is $1 of risk. Okay, so therefore 15%, okay, 15% of $1 of risk is 15 cents. So I will want to collect at least 15 cents per spread. Okay, so that is 15 cents per spread that I would like to collect as a minimum. So if I was to sell the 83, and I was to buy the 82, I would end up being paid 29, which ideally you want 35, even though the minimum is 25. So, let's say we're going to take it, and then you would end up paying 18 out of your 29. So this is quite tight, right? Because if you get paid 29, and to get 29, you pay 18 for the protection, is giving you 11, where the fact is that you need 15. So it doesn't work. Okay, it doesn't work. But I have seen earlier flashing this number, which that number dropped to 15 just a little bit ago, and I also saw that number. I think it was 31 or something like that. So I think that if you are patient, okay, if you are patient, you may be able to sell a vertical. Okay, not sure if you will manage to get filled or not, but if you are patient, maybe you get it. Right now, as you can see, is giving us 11, but I've seen, unless I didn't look at it right, I believe I did see 15 a few minutes ago. So, I think that it's worth it to try to place an order to sell the 83 and buy the 82. But instead of doing, of course, don't do market, you will want to come in here and do 15, okay, and place the order, and of course, then you will need to decide how many contracts, what is the size of the trade that you want to execute. Okay, what you know in this trade is that the most you will lose is 100, and for you to get paid 100, for you to lose 100, you get paid 15. So in other words, the risk of the trade is $85. So if you are okay risking $85, you would do the spread once. If you are okay risking twice, then you would do the spread twice. To do the spread twice, you would just repeat the same action I just did: sell a vertical, okay, sell the 83, buy the 82, okay, but instead of one, just go for two, okay. And now instead of having $85 of risk, you would have double of that, which is $170, if I'm not mistaken. Okay, so this is a trade where you would be expecting Merck to fall below 83. So you are basically betting that stock will either go up or drop a maximum of $3 in a couple of weeks. To be precise, is exactly 15 days. Yeah, so exactly 2 weeks. Okay, and if that's the case, which is very, very likely could be the case. I mean, think about it. You have an uptrend. The uptrend is strong. The S&P is in an uptrend, and then you got not one but two UFOs to defend itself. So the trade got probability on its favor, and therefore it is justifiable as long as you get 15 cents. Okay, so place your limit order. Don't rush. Don't lose your patience if you don't get filled, and make sure that if you do get filled, it's at least 15 cents. And if not, just be happy canceling the order, and that is it. Okay. Anyway, my friends, I believe we will conclude the session now. I have a good news, which is on the next day, which is Sunday. Even though I will still be in China, I will be in a different location, and therefore I believe that the internet connection should be more reliable, and in that sense, we will be able to have a smoother session, if you wish. In the meantime, I will wish you to keep up the good work, to be disciplined, to follow the plans, to follow the rules, and to trade professionally. That's the way to do it, my friends. Okay, so see you soon. Take care, everyone.